Hello and welcome. You have tuned into the weekly edition of Your Trades on ET Now. I'm Shrishti Sharma and with me is Lisa Fernandez. And Lisa, what a historic week it has been for the Indian markets, because not just in Nifty, we have hit a record high on the Sensex as well. 20,200 for the first time ever is what we have seen on the Nifty 50 index. And the gains this week were actually driven by the large caps, especially because on the broader market space, there was a day which was full of nervousness, but the small cap and the mid cap segment of the market was seen to be recovering quite smartly from that day. But we started on the day we started this week rather with those record high levels, and we just continued to build on to those levels as well, and we ended the week close to that 20,200 mark. When it comes to the Bank Nifty index, so we are not very far from the record high levels, but yes, looking towards that and expecting that maybe in the upcoming week we can actually hit those levels. But if we talk about some of the news flow, then FTSE rejig as well as Sensex rejig, these were the two rebalancing that were supposed to happen, and we have seen around 570 million net inflow for India coming in. Optimism returns to the sugar counters on the back of so many news flow. There was DAM Capital initiation note, as well as if we talk about the overall fundamental news regarding the price, all of that was supportive. Other than that, like I was mentioning, that the broader end of the market didn't pan out that well for this week. So profit booking was seen in some of the select sectors like railways, defense as well as shipping, but can't take your eyes off from the crude oil prices, which was seen to be hitting a 10-month high level and hovering above that $90 per barrel mark. So not a great news for India, and especially the equity markets, but they were seen to be defining their own way. But for the upcoming week, that's going to be a crucial one, because that's not just a truncated week. We will be having the FOMC meet, so the outcome is awaited. And other than that, the record high journey will continue or not. So these are the big questions for the upcoming week. So let's try and put those questions to our experts and try finding an answer to that. With this, let me welcome on board two of our very special guests. Onto the technical front, we are being joined by Rajesh Palviya, as well as on the fundamental side, we are being joined by Mahantesh. Very good afternoon to both of you gentlemen, and thank you so much for your time. And Rajesh, firstly coming to you, because just last week when we connected with you, you gave all of our viewers four different stocks rather, and they did so well throughout this week. I remember that all of those were from the large cap space. Firstly, congratulations for that. And you were also positive on the markets, but now when the index are at a record high levels, do you believe that the next week we're just going to be building those levels, and any levels that you have in mind?
Yeah, good afternoon, Shrishti. Thanks for the compliment. So yes, definitely this rally can extend further in the coming week, as we have seen the broader market started again, participating again, and most of the mid cap, small cap also started recovering. We have seen some shakeout kind of, trading behavior in the beginning of this week, but again, the smart recovery in the broader market has clearly showing that, this trend is likely to continue further, as the put base is very well intact on the Nifty. Now put writers are aggressive at 20,000 strikes, so that clearly shows that base is now shifting higher. Even on the Bank Nifty also, we have seen very smart buying action, and now Bank Nifty is comfortably holding above 46,000 level. So looking at both the indices, yes, we do expect further more momentum we can see in the coming week. For Nifty, we are projecting target of 20,400 to 20,500 in the continuation of this uptrend. And for Bank Nifty, if it continues to hold above 46,000, 45,900 level, then possibly Bank Nifty may also exhibit furthermore bullishness towards 46,800, where we are projecting the next week target for Bank Nifty also. Again, in the current week, we have seen both the indices have displayed the long built-up setup, and sector rotation, that is the key theme which is playing out in the market. Every day we are seeing new sector is taking the leadership position. That clearly shows that sectorial rotation is happening in the market. That is also giving us the confidence that furthermore momentum is likely to be there in the coming week also.
Well, thank you, Rajesh, for that. But my question goes to Mahantesh. Good afternoon. This is Lisa on the other side. So I want to bring out a question on L&T buyback that opens on Monday, that is 18 September. So even the buyback price increased because the last 1 month saw a surge in the price of L&T and the buyback price is at around 3,200. So what do you think about L&T's momentum going forward? And also, will there be good participation in this tender of a buyback?
Good afternoon. Firstly, a disclosure, I own L&T shares, but to answer specifically on your question, if you look at just the number of shares that are going to be bought back and extinguished, it's hardly about 2.2 odd percent, which will, in my view, do nothing really in terms of the overall stock fundamentals. The key fundamental one typically looks at once the buyback happens is whether you will have substantial improvement in the return on equity ahead because the base capital, the equity capital has shrunk. Given that the equity capital shrinkage is likely to be just about 2.2% or thereabouts, it's not material enough for the ROE to be enhanced just because of the buyback. Will there be a participation from retail investors on to this buyback? Then the buyback price and the current market price gap has substantially narrowed, with the result that many investors may not necessarily participate in the buyback. I do expect that the company will eventually conclude the buyback with full subscription, but the overall participation in terms of number of shares offered will probably thin out.
Okay, Mantesh, thank you so much for your take on L&T. The tender offer buyback opens the upcoming week, and what are you expecting out of that? But Rajesh, one commodity that is seeing no cooling off is the crude oil prices. Though onto the whole base metals, we are seeing a jump up, especially crude. Look at Brent crude oil, that's near to that $94 per barrel mark. So do you believe that going ahead, the gains in the crude basket will also move forward, because that's generally not a great news for India?
So, though crude is in overbought trajectory, but still there is no stoppage for the crude at this moment. Buying interest is still there in the crude prices, and we do expect that if it continues to hold above 91.50 $92, then possibly this rally can extend further towards 98 to $102 also in the near term basis. Even if we take the view from the MCX prices, almost it's trading at around 7500 mark, and looking at the MCX crude also, that if it continues to hold above 7400 level, then possibly MCX crude can also scale up to the level of 7650 to 7700 also. So yes, crude is looking still bullish, but one needs to take very strict stop loss if you are buying at current level, because crude is already trading at overbought zone, and buying interest still there. So there could be a risk of some dip also in the near term, but overall structure is looking bullish. Keep your stop loss at around 91.50 if you are holding long position on the crude.
Well, thank you, Rajesh, for that, for giving your take on the crude oil. But Mahantesh, there's a lot of IPO action lined up next week. There's Zaggle, Sami Hotels, which closes for subscription, as well as Yatra online. So, what's your take on the IPO? Like, which IPO should investors subscribe for?
Now, given the background that you have a market wherein the small cap and the mid caps in the past week, the week that just concluded, has seen a slip up in terms of the prices, such IPO may not necessarily sound good news for investors because the valuations are particularly too high. I mean, let's look at the background for most of the mid caps, small caps. The rally has been in the past 6 odd months or for this calendar year has been upwards of like 35%. And in certain cases, some stocks have become multi-baggers. Given this kind of background, it becomes a little fraught with risk to really participate in any IPO. As it is, IPOs of the past, when there used to be a bumper listing, for most of the IPO listings is now a thing of the past because of the overall time that has been crunched from an IPO to the main board in terms of listing. That effect will mean that only genuine investors would like to participate. I particularly don't fancy any of the IPOs nowadays that come to the market.
Okay, Mantesh. So, no such IPO that is on your radar. Thank you so much for that take. But guests, please hang on because as we are slipping to a very short break, don't go anywhere because the discussion continues on the other side. Welcome back to Your Trades on ET now, where we are discussing about the outlook on the markets with two of our very special guests, Rajesh on the technical side and Mahantesh on the fundamental view. And Rajesh, coming to you for your take and your top recommendations for the upcoming week, because last week VIX did phenomenally well. So quickly, if I may ask you, that what will be your top recommendations?
So for coming week, we expect that pharma, financials, as well as automobile, these three sector can show further more bullishness. We have seen a lot of buying action in the current week also, and looking at the overall setup for most of the stocks are showing that there is going to be further strength in the coming week. So from financials, banking financials, so we are bullish on Bandhan Bank. Stock almost closed near to a day high. There was a long built up in the today's session, and looking at the overall structure for Bandhan Bank, we expect that this stock can continue further more upside towards 275 zone. So Bandhan Bank is a buy with stop loss of 238. The second sector is pharma, and from that space, we are bullish on Dr. Reddy. Stock has shown a very decent up move in the today's session, and almost on the weekly chart, stock is now managed to give breakout of last 2 week downfall. And looking at the overall structure for Dr. Reddy, we expect that this rally can extend further, and we are projecting target of 6,000 on the Dr. Reddy. Keep your stop loss at around 57.45. And the third stock we like is TVS Motor. Stock is in uptrend across all time frame, and there is a sustained buying is happening in the stock. This is a third consecutive week where stock is forming higher high low formation. And looking at the overall structure for automobile as well as for TVS Motor, we expect that this rally can extend further, and we are projecting target for TVS Motor towards 1550, 1560. Keep your stop loss at 1468.
Well, thank you, Rajesh, for that. Again, we asked you for 2 picks. We got a third pick free. So that's TVS Motors, Bandhan Bank, as well as Dr. Reddy's coming in from Rajesh. But Mahantesh, going over to you, we have the big event FOMC meet next week on 20th September. And largely, it's expected that the rates are expected to be unchanged. But owing to the inflation rates that had come up this week, where it was hotter than expected. So any negative surprise? Are you seeing any kind of negative surprise in this?
I wouldn't expect any negative surprise. There would be a status quo maintained by the Fed, very likely, is my expectation. As far as the inflation jumping up for the recent month was primarily an effect of crude oil or fuels in the US, which to my mind seems to be a little temporary in nature. That said, there are other items of the inflations which are rapidly cooling down with the objective of the Fed being to cool down the overall inflation and to keep the unemployment levels pretty low, that those two objectives are well being achieved. I expect that along with the status quo, the Fed might potentially indicate that there could be a longer period rate pause and can hint at a reduction in rates much later down the line, which is probably 1.5 year to 2 years down the line.
Okay, Mantesh, thank you so much for your take on what are you expecting out of the FOMC. But with this gentleman, we'll let you go on that. Thank you so much, Rajesh and Mantesh, for giving your time to ET Now and helping with your outlook on the markets.
Thank you.
Well, moving on, viewers, let's shift focus to the railways then, because railways has been in the spotlight, and we spoke to the management of RVNL Retail as well as Texmeco to know about their orders and corridor execution plans. Let's listen into what the management of these companies said.
This will take some time, but it will be a high priority corridor, and this will be executed on very fast track. And every country which are getting associated, the Middle East and all the countries part of the Europe, they are very keen. Even the US is very keen, and His Excellency Joe Biden, the President of USA, very specifically mentioned about this particular corridor. So we are watching it. And our rail portion will be basically in the UAE, Saudi Arabia, Jordan, and Israel. And future of RBNL looks very, very bright. And I can tell you that in time to come, in within 60 days, the roadmap will be drawn.
This 1 lakh crore budget of Indian Railways is going to flow through next 4 to 5 years at least. So tenders and all those things will start coming. They are under preparation in the Ministry of Railways. They are coming out slowly, but they have not yet. We have participated in a few 2 to 3 small tenders, but bulk you will see maybe another 5-6 months will start coming out.
Well, we are sitting right now on an order book of something like about 7,000 crores, 7 to 8,000 crores in that range, and that's a lot. And orders the market is very buoyant, as you know, and we keep on getting orders almost every month. So that's the order book position, and that's the reason why we are ramping up production. That's the reason why we are adding on to capacity, and that's the ultimate reason why we are going on for some fundraising.
Well, along with these rail stocks, the overall market has seen a great run-up. But what's next after this bull charge, and where is D Street headed? We spoke to a host of experts this week. Well, listen in to a slice of conversation that we had with them.
Indian market, has a tremendous journey in the last few years, and it's shining very well in the global arena as an economy, as a market capitalization, and by all standards. It's something great news for India to celebrate.
All the good news are there in price. That does not mean that market is going to fall today or tomorrow. This may continue for 1 month or maybe for 2 months. But of course, it is not going to last forever. 100% it is euphoria. It is you can say that FOMO or whatever the terms we use in this market. So people are still fascinated about now penny stock and cheap stock and chota price ka stock. SME also, I think psychologically people treat that SME like a penny stock. I think so. SME is not a penny platform. Let me clarify this thing.
The country is firmly, on track to continue its growth rate, being one of the fastest growing economies in the world. And for a change, I think this milestone does not sort of scare you. I think this is a milestone which is backed by fundamentals, which is backed by optimism that this growth rate is going to continue. And therefore, I think it gives confidence that this is just one of the milestones. There are many more which we need to conquer as we move ahead. I think one has to be definitely optimistic because there is still a lot of room ahead for the economy in the markets, but extremely cautious of not getting sucked into this FOMO kind of a situation.
Once again, euphoria which has made a comeback. So I think what I feel is that the mid caps and small caps could take a bit of a breather, and you're seeing that on the screen today with the downtake. And this could continue for some more time because there is clearly room for some downside. But I think the focus is really going to move to the large caps from here. So the large caps can make up for the underperformance of the last couple of months is what the view is for the next few weeks. And we do see the Nifty gradually moving towards a level of 20,400. I know it's not big in percentage terms, but unfortunately, I don't have large targets to work with because I do believe that the Nifty is going to be in that band of 19,500 to 20,400.
Okay, so those were the big voices of the markets and their take on the outlook going ahead. But with this, viewers, we're completely out of time in this edition of Your Trades. It's a goodbye from me and Lisa and the entire team who put this show together. Have a happy weekend, but don't go anywhere because as we leave you, we are leaving you with the important cues to watch out for next week. Take a look.